Hi everyone, thanks for checking in today. It's Adam Coburn here at Lowe & Co, and we are talking about the Wellington real estate market, of course, for the month of September 2023 compared to the last 1 or 2 years. Overall, folks, Wellington values continue to rise. My message to buyers continues to be, get in amongst it, don't wait for things to get better. And sellers, very encouraging. The market continues to firm, values are rising. It's actually quite a good time to be a seller. So let's get into the details. Median sale price in Wellington, $782,000 September 2023 versus $820 a year ago. It's down 5%. 5% is definitely still a bit of a drop, but it's nowhere near the drops we've seen over the last sort of 12 to 18 months. And if you look at the shape of the graph there, the red line, which is the 6-month moving average there, it has been almost horizontal, kind of very, very shallow decline since about July 2022. And indeed in the last month, it's actually just ever so slightly ticked upwards there. So it's been broadly stable since July 2022, and certainly on that basis, it looks like the drop's over. But if you follow these videos, you will know that I don't pay too much attention to the median sale price because it reflects not just underlying values, but also the mix of properties sold in that particular month. So the best guide to actual underlying values is the Real Estate Institute House Price Index. So let's look at that now there. And we start here with the league tables, and you'll see there that Wellington region has dropped by just over 22% since the peak of the market in late 2021. Now that in Wellington, we were as low as 26%, so we've recovered from 26% or thereabouts to about 22%. We were leading these league tables, if you like, by quite some margin, and now, although we're still leading the league tables, there's no region in New Zealand that has dropped by more than 22.4% in the country. We're only just ahead of Auckland at 20.1%, and we're still a wee way away from the average across New Zealand at 15.5%, but not to the same degree that we were historically. So if you like, Wellington dropped soonest and fastest, and then the rest of the country kind of caught up, and then Wellington recently has recovered soonest and fastest, and so that gap is now narrowing between Wellington and the rest of the country. So if you look there at the numbers over the last 12 months, and that's interesting, we've had New Zealand, Auckland and Wellington have all dropped by 3.3% exactly over the last 12 months. So whilst Wellington leads the league tables, if you like, across the whole country in terms of the gap between the peak and now, we are identical or absolutely average or normal compared to the rest of the country and Auckland as well, at just over 3% drop over the last 12 months. And of course 3% in 12 months is not a great deal, certainly compared to the much bigger numbers we were seeing before, where we saw, I think, something like 20% drop between the peak and then 12 months later in Wellington. And indeed there, over the last 3 months, you'll see that Wellington has actually recovered by 3.5% versus 3% recovery in Auckland, 2.5% in New Zealand. So in the same way that Wellington was first out of the gates in terms of the drop in values, we seem to be pretty much the first out of the gate in terms of the recovery as well. So Wellington is leading the recovery of real estate markets across New Zealand as well. And if you cast your eye up and down there, all of the numbers across all the regions over the last 3 months, they are all positive. So every number there shows a recovery, with one exception, that's the Bay of Plenty, at negative 0.9%, but overall all the different regions across the whole of the country, all markets are now pretty much in recovery mode. But as I said before, Wellington is really among those that are leading that charge as well. So let's dig a bit more closely now into the Wellington House Price Index results. So you see there the 1 month, 3 month, 1 year, 5 year, and so on. So values generally have been rising in recent months in Wellington. So 3.5% over the last 3 months, and a drop of only just over 3% over the last 1 year. And the shape of the graphs there also tells the picture reasonably clearly, or tells the story reasonably clearly. The blue line is the 1 month results there, and so you can see it has been gradually trending upwards there. And since about April or May, pretty much it's been in positive territory. Took a wee while longer for the 3 month result, the 3-month line, that's the orange line, to head up there above zero, but now well and truly above zero there. Over the last 3 months, again, you see there Wellington versus New Zealand and Auckland. As I said before, Wellington's leading the charge at 3.5%. So Wellington's recovery is leading New Zealand and leading Auckland. And again, if you look there across the different territorial authorities in the Wellington region, so Wellington City, Lower Hutt City, Upper Hutt and Pororua, they're all still negative numbers over the last 12 months, but not very negative. So as little as negative 0.8% in Pororua, so less than 1% drop over the last 12 months. That's pretty much stable. Wellington City at 2.8, Upper Hutt City 2.9. So no terrific falls over the last 12 months. So the whole of the Wellington region has only dropped by a tiny amount over the last 12 months. And I would suggest that that's been 9 months of gradual dropping and then 3 months of recoveries, leading us to broadly flat over the last 12 months. Looking now at new listings volumes, 452 in September versus 515 and 689 in the previous 2 Septembers. So we're 12% down on a year ago and 34% down on 2 years ago. So, gosh, new listing volumes remain very low indeed. Surely they almost literally cannot go any lower. You look at the shape of that red line there showing the 6-month moving average. We are significantly below the number of new listings that we were seeing coming to the market even when the country was in lockdown. So it really is anemic. The vendors really have been on strike. On the ground here, myself and my colleagues here at Low & Co, everyone is saying that we have a lot of vendors getting ready to bring their property to the market after the election. So I'd be very surprised if we don't see a significant uptick in the amount of new listings coming to the market in the next few months. But indeed, we have to wait for that data to come out officially. So on average, you can see there, September on average 631 listings. We're significantly below that at 452. 631 is less than we saw September 2 years ago at 689, so that wasn't necessarily indicative of what's normal, but nonetheless the message is clear. Vendors have been on strike. We have been seeing extremely low levels of new listings coming to the market indeed, but we do expect that that's about to change. And the next graph there you see, this shows the number of new listings coming to the market compared to 12 months ago. So if the blue line is below the x-axis, that means fewer listings than 12 months ago. If it's above the x-axis, that means more listings than a month ago. We've been consistently below the x-axis there since September 2022. Over the last couple of months, we haven't been down by all that much, but in September this year, of course, we were comparing it to last September, which was significantly down on the September before. So reduced for 2 consecutive Septembers in a row. But again, the shape of that red line there, you'll see it is heading back towards parity, and we expect it to see significant increases from here. What about number of sales? So it's 521 in September versus 537 a year ago and 657 2 years ago. So pretty similar to where we were 12 months ago, but a significant drop compared to 2 years ago. And again, the September average is 630. So we are significantly down below that and have been for some time now. You can see from the shape of the graph there, though, that the number of sales taking place on average over the last 6 months has been gently increasing, although a bit of a decrease in the last 1 or 2 months. Can't help but think that the number of sales, obviously the number of sales is constrained to a certain degree by how many listings are coming onto the market. So as we've been very, very anemic in the number of new listings coming onto the market, this is going to provide a constraint to the number of deals that can get done. So to a certain degree, this result will be being constrained by the lack of new listings coming to market. So it'll be interesting to see. Well, if indeed we do see a big increase in the number of new listings, will that be matched by an increase in buyer activity and the number of sales taking place as well? Looking now at the duration to sell, and we have seen a significant drop in the duration it's taking to sell. So back down to 34 days in September compared to 56 a year ago and 41 2 years ago. So September 2021 was before the technical peak of values, which was October, November 2021, and the time it's taken to sell property in Wellington in September 2023 is less than it took back then. So that's pretty interesting. We're seeing properties sell quite quickly again. So it's taking a shorter period of time to sell than it was taking in late 2021. So this is the shortest duration to sell, if you like, since December of 2021. So it's back down to pretty good news for sellers. It's not proving that long to sell property again in Wellington. Number of weeks worth of inventory, and this is a pretty similar story. So for the last 4 months, we have seen inventory levels at 10 to 11 weeks. The average is 14 to 15 weeks, so we're significantly below what's average, and so on that basis we technically say that we're in a seller's market. Again, good news for vendors. 10 weeks worth of supply compared to 18 weeks a year ago, and 7 weeks 2 years ago. How many listings on Trade Me? 1,914 as of a day or two ago when we were recording this, compared to 2,460 in October last year and 1,400 2 years ago. So we're 21% down on the amount of stock we saw a year ago, still 37% up on what we saw 2 years ago. But 2 years ago, we were only just starting to see number of listings increasing off the absolute lows that we've seen for a very, very long time. So we're comparing it to very low numbers there. Again, if you look at the shape of the graph, that's quite instructive. So we were floating around 2,500 to 3,000 in the Wellington region for about 12 months or so. Over the last 6 months, we've dropped significantly since then. And in the last 3 or 4 months, we've been reasonably stable, and only just in October, a very small, really a gentle increase over the number we saw in September. We always see this in springtime because of the election. That has caused a lot of sellers to hold their properties back. So we only have seen this really, really small increase from September to October. Normally we would see a much bigger increase, and as I sort of indicated before, we would expect now to see a big increase in the amount of new stock coming to the market. Whether that will be reflected in a big increase in the number of listings on Trade Me is yet to be seen, because of course if we see a much greater activity from buyers leading to a lot more sales, then the number of listings on Trade Me won't necessarily increase by all that much. So in summary, folks, Wellington values continue to rise over the last few months. New listing volumes remain low, and sales volumes are also low. Duration to sell has reduced, and we're now at the shortest duration to sell since December 2021. These are all great signs for vendors thinking of selling. Inventory is low. It has been a stable seller's market for the last 4 months now. Trade Me listings remain low, but the degree to which we're reducing compared to a year ago is easing. Message to sellers is the market is firming, values are rising. It's actually a pretty good time to be a seller. Buyers, don't wait for things to get better. And a big shout out as usual, thanks to Real Estate Institute and realestate.co.nz for my source data. It's Adam at Low & Co. If you do want any individualised advice, please reach out to me. Happy to help. Check you next month.